Good afternoon, traders. It's Simon here with the weekly review. Again, we start with the US dollar indexes, and my concerns last week of buying at the top were kind of justified for this week. And as you can see on the daily chart, we actually have this mini double top pattern forming. Obviously, I didn't know this would break down like it did so much using this chart, but when we use the other dollar index from FXCM, you can see why. My concerns this week would be actually selling now into this trend line, into this key level and daily 50 EMA. The only good thing though, every time we have the double top pattern here, we have broken down the 50 EMA there. So there is always scope that we could break down, but we are entering an area of high interest buying and selling, so you may find the dollar will slow down a little bit this week. When we come down to the US dollar index from FXCM, this is the reason why I actually was looking at, like, I think it may pop down a bit. It has moved down nicely. This gives you more scope to the downside, so this here looks like it may move down a little bit more, but we will go and look at the pairs bit by bit. So on the Aussie dollar, what I notice here is a little mini, like on the intraday chart, it's like a mini double bottom, triple bottom pattern. So when we look down on the intraday charts, let's just go back and have a look for you there. And you'll see that we said last week it would gap. So before the market opened, we said it would gap. It did gap like we thought it would. It came back down, chopped around, then moved back up again. So this is the 4-hour chart. You have got bullish MACD divergence on the 4-hour chart as well. So for me, this could indicate that the dollar is going to weaken off a bit, and there are some dollar pairs you could trade. Notice how this downward sloping trend is just to line up. Once I saw this double bottom pattern happening, it was just to line up the highs on the 1-hour chart, and this was what the highs were there. And as you can see, we popped up, come down, test 150, come back up again. So any move back down now, the tested downward sloping trend line would be a nice little long on this pair here. I don't think this is the best pair to go long on, but at the same time, it has got the 1-hour 50, the 4-hour 50 all lined up nicely. So Aussie dollar is a pair I'll be looking to go long this week, and only up to 0.7, clearly because daily 50 MA key level, blah blah blah. You don't want to trade and hold into that kind of strength there, that resistance level. Euro dollar though, again, I'm a bit on edge here. We have got a little double bottom pattern here, but we do have this downward sloping trend line which has not been broken. Don't think this is now a buy, because I'm going to start selling some dollar pairs. You've got daily 50 MA, downward sloping trend line. I think if you're going to buy, it's only up to the trend line. I wouldn't trade through that trend line at all. That's too key, just to highlight you how strong that is. 1, 2, 3, 4 strong touches. Rejection there, it popped out a little bit. 5 daily 50 MA, 1, 2, 3, 4 touches as well, and you don't want to trade through that. Break and retest, or at least if you're going to do anything, trade the breakout. Do not trade through that and hold your trade. Okay, so that's my key there for this week. Looking at the weekly chart again, what I want to highlight to you here is this isn't moving now. We're getting squeezed in a bearish wedge formation, bullish RSI divergence. So just waiting for it just to break out now, because this is getting a bit boring. I still think we could head back up to this area up here, because once you break out, the expected 1 to 1 pound distance would be up here, and then you'd actually have your head and shoulder pattern to sell off throughout next year. So that's it. Just wait for the moment to see really what happens overall for the weekly chart. Pound dollar, I said I was looking to buy last week. If it tested 1.27, and what's done here now on the weekly chart, it's tested 1.27 quite nicely, and to be quite honest, that does give me a nice trade to the upside, at least a small move up. Now I know the UK had the Prime Minister quit for once, which is kind of a good thing. I suppose she was a bit useless. And if you look on the daily chart now, you can see the 3 candle reversal, quite nice. The volume isn't great there, but when you zoom out 1.26, you can see it has been tested in the past 1.26, so it does give me some decision to move to the upside. Now when I say 1.27, it is like this high test candle here. Some people class it as being a reversal candle, which it can be. It's not really a problem too much, but when you come down to the lower time frame, just so you know, a lot of pound pairs were like this. It's just a higher test. The 1 hour chart is just still bearish. There's nothing happening. But what we've got now though is a break, retest of the 1 hour 50 and a move up. So any move down now would be quite nice. I don't think pound dollar is the best dollar pair to trade, to sell against a dollar. It just doesn't give me that confidence. And again, if you look through other pound pairs briefly, you're going to see you've got any strength there. The Aussie hasn't got, no, pound Aussie hasn't got much strength, which means the Aussie looks a little bit stronger. Pound CAD, the CAD's weakening off a bit there as well, so you can definitely, but you might get along there. But the problem is, you're kind of in the key levels. You don't want to do that. Pound Swiss doesn't give me much confidence there either. Pound yen's dropped down a bit lower than you expect. Pound Kiwi still going down. So I don't think the pound's the best pair to trade against the dollar this week. There are other pairs out there. And one I do like is Kiwi dollar, which is next. Now, I've been saying to you this, don't buy it, don't go long this pair until it breaks the downward sloping trend line. And on Friday we had the push up to break above this trend line and this key area here as well. So for me, that's a very tidy trade to look at. RSI is at 0, looks like it's popping back up now, which is nice to see. We've got now on the weekly chart this lovely beautiful doji candle, and RSI is at 0. So for me, I'll be looking to take some long positions on the Kiwi dollar this week. And if we come down to the intraday charts, what I've done is drawn you the 1 hour downward sloping trend line there, and you can see all the peaks we broke above that, the 1 hour 50, and then we'll come back down for a retest at some point or another. So realistically, where can we go for? You got the same almost as the Aussie dollar, actually, in all fairness. You got the 4 hour 50 current towards the pivot, the 1 hour 50 current towards the pivot. So it's kind of one of these things where you have to see how it's gonna trade, what it's gonna do. The best way would be something like this: is use Fibonacci. Let's take a look there. What we got. Any pullback to S1 would be nice. So if I was to do a set and forget order, it would be at S1 like that. My stop below 764, and my target. Well, on your target, you're going to have to clearly at least go for the daily 50 EMA, get some money out of this trade. So at least around this area here, with 66, 66.2, 66.3. Looks like it's a possibility there. But at the same time, though, if it breaks it, you've got 67.25 as well. So you've got a couple of positions you could go on there. 66.4, it's 3.5% trade there, minimum really, in all fairness. Say stop, set and forget, have it for 24-hour order. That's what I'd be looking for, something like that. If it does come down, start testing the 1 hour 50 EMA with the 4 hour 50 EMA and the pivot, I may do something like this, a little bit. If I was to do that, it'd be something like that, a little bit tighter stop that way, and I'll then target again 66.2, 60, something like that. So it's still the same percent trade. It's just put your stop behind this downward sloping trend line. I would like a test of the downward sloping trend line, hence why my order would be there, just because it's a better place to put an order. It would be. Dollar CAD does nothing, still does nothing, hasn't moved, gone nowhere. I'm not going to repeat myself each week. Candles ain't moving, double for trading it. Simple as that. I do believe if the dollar weakens off, then this will head down. It will break it down sloping trend line, but like I said, there's better pairs out there, so we're just going to skip that one. Dollar yen, couldn't really predict. We did say a daily 50 EMA would be a nice target. Never tested it, just went off it afterwards, so not particularly interested in that at all. Let me have a look at the US30, because the US30 we do see. Notice now it's now broke down, so we suggested last week it would start breaking down. It has broke down. It's popped back up a little bit there. Nothing to worry about there if you're in the trade at the moment, and you can hold this trade for a fair bit of time. Notice how the 1 hour 50 EMA has been tested again, although it's not the greatest test in the world. I don't particularly see much bearish or bullishness at the moment. The higher time frames give you it's just indecision here now. So just hold the trades open if you're in holding it. Take it by ear to see what really happens. I know some people are going to draw trend lines like this and say, hey look, is that a break and retest of a downward sloping trend line? But the problem is not looking at the bigger picture, and the bigger picture is obviously the higher time frames, which is this daily 50 EMA still, and we started breaking down. So I'm happy to hold this trade open to see what happens. Once you break this weekly 50 EMA, it will move down quite nicely. That's what we're looking for there. Gold itself, I'm looking to go long on gold as well. This is the position I'm thinking of, something like that. So if you notice, we've broken out of this downward downward sloping trend line. That's a higher low there. Technically, or you can put a triple bottom at least. And we pop up to the upside. The daily 50 MA I'm not too bothered about, purely because it hasn't really been respected much. No, once or twice it has chop through, test, break gun, chop through, then we're here again. So say it really had one decent test, two decent tests, that's it. In a trending market going down, yes, it was good, but at the moment, nothing at all. I'm not particularly interested in that now, so daily 50 MA can just be left alone. This kind of stop is what I'm looking for, roughly below the lows there, just because it's a decently safe trade there in regards to your stop. If you're wrong, then you're wrong completely in that kind of trade there. So this is what the intraday chart is like. This is the 4-hour chart. You've got your triple bottom there. You've got bullish MACD divergence leading from the past here. You have, so this low here to this low here. There's your bullish MACD divergence there. So now it's just one of these trades where if you like taking it on the daily chart, fine. If not, again, you've got Kiwi dollar, I think, or Aussie dollar being some of the better trades this week. And that's really about it, guys. So any questions, give us a shout. If not, we'll speak to you soon. Take care.